Hi, everybody. Good morning. It looks as if we've got the majority of people into the Zoom room now, so we'll make a start. So, good morning, everybody, and thank you very much for joining us today for this Accentuate by K3 Hub session, which is brought to you by members of the K3 Capital Group PLC, a multidisciplinary professional services group listed on AIM. My name is Marie Wadeson, and I'm a managing director here at Quantuma. And on behalf of the K3 Capital Group, I lead the K3 Hub. For those who haven't already signed up to the K3 Hub, it's a membership group of over 1,750 like-minded professionals, which is powered by the members of the K3 Capital Group. K3 Hub members can receive a range of benefits through their membership, which include a CPD and training program, which offers a range of structured CPD courses delivered by Tolly on our behalf, and also unstructured CPD training courses such as today's session. Our members can also access the broad range of professional services offered by the members of the K3 group. And for certain types of work, we're also able to pay a referral fee in return. So a couple of pieces of housekeeping just before we move on to our speakers for today. So a number of you ask me this question fairly regularly. We are actually recording today's session. A copy will be made available on the K3 Hub website in the next couple of days. We've also got a fairly full and diverse agenda today. That said, the Q&A functionality is switched on, and we would encourage you to ask questions of our audience as we go along. I'm going to try and handle the Q&A in sort of discrete sessions. So as questions come in, I'll handle each of them for each speaker as we go. If for whatever reason we get more questions than we can actually handle during the time we've got available, what I intend to do will be to package up your questions and pass them into the relevant speaker with your contact details. Okay, so we're moving into the first part of today's agenda. So first up, I'd like to introduce my colleague, Scott Campbell. Scott is a director at K3 Capital Advisory and is an employment tax specialist. Scott advises on domestic and international employment tax matters, UK national insurance, national minimum wage. He also advises on the construction industry scheme and both the onshore and offshore intermediaries legislation. Scott, over to you.
Sorry, finding the mute button there. So today I'm going to cover the trends that we're seeing within employment taxes when we're looking at due diligence. And it's fair to say that employment tax has been a feature of due diligence projects traditionally, but what we've seen is a change in the type of questions and concerns that buyers are having. So traditionally, we would see things such as payroll compliance, expenses and benefits, termination payments, family members being employed in the business. Those were the types of concerns that buyers were raising. But I'd say over the last 6 to 12 months, what we've seen is less typical areas, less traditional areas causing a concern for buyers. The first of which that I wanted to touch on was contractor taxes. Now, a lot of this has come from the changes that we've seen to IR35 off payroll working from April last year. And IR35 and off payroll working is probably a session in itself. And indeed, I think later in the spring, we will be running a session on off payroll working. And while it is the initial cause of the concern for the buyer, the actual significant tax exposures aren't coming through from off payroll working just yet because it's relatively new legislation. We haven't had enough of a period of time to build up that potential historic tax risk because it's only 10 months into the legislation coming in. But when we're looking at contractor taxes, what we're actually seeing is other areas of contractor taxes that are creating significant tax exposures and risk there for buyers. One of the main areas relates to office holders. Now, there was a piece of legislation introduced in April 2013, which essentially limits the ability for office holders, and I guess here we're particularly thinking about directors, but it can be company secretaries or shadow directors, someone who isn't a statutory director, but is, for all intents and purposes, acting as though they are a director in the business or an office holder. And what the legislation says is essentially where you're an office holder, you should treat any earnings and income paid to that individual as employment income. And the interesting thing with the office holder legislation is it actually gives Hmrc the ability to look for the underpaid tax where the legislation hasn't been complied with from not only the individual if they're engaged through their own personal service company, but also the underlying company. So in essence, the legislation that we've got come in from April of last year is already in place for directors and office holders. And that is what we're seeing is a significant exposure where directors haven't been paid through the payroll. The other area in contractor taxes where we're seeing significant exposures, and something that's been overlooked because of the changes that came in from last year, is around the self-employed. The self-employed still seem to make up a big proportion of the contractors within a business, and there is a large risk there that there's a potential for a Hmrc employment status challenge, reclassifying them as employees and businesses being on the hook for that underpaid PAYE and national insurance. So those are the two main areas where we're seeing significant exposures, albeit it isn't the main reason why buyers are interested in contractor taxes initially. Another area that is concern for buyers is around the CJRS or job retention scheme, or furlough scheme as it's commonly referred to. And clearly a lot of that is linked to the recent press coverage around sort of COVID support scheme fraud, which is estimated at somewhere between £4 and £5 billion. And the fighting fund that Hmrc now have of 155 million to tackle non-compliance or errors in COVID support claims, and the majority of that is going to come from the furlough scheme. And what we're looking at when we're reviewing these claims is broadly three types of errors. So the first of which is errors in the amount of grant claimed for a particular employee because of the pay that's been used. And the sorts of errors we're seeing is where an employee's pay should be pegged back to their earnings at 28th of February 2020, but the employer has given them a pay rise perhaps in June 2020, and then based their COVID, their furlough grant on that 2020 pay rise. That's one area of mistake that's quite common. The flexible furlough and usual hours calculations is notoriously difficult to get right, and we're seeing lots of errors coming from that. But also in terms of pay elements that shouldn't have been included in calculating an employee's pay actually forming part of that calculation. The other area of concern is around where there's been a change to the scheme and employers have not picked up on that change and not reduced their claim accordingly. So we're thinking here primarily when the scheme reduced from an 80% grant claim down to 70 or 60%. But in addition, it could be something related to the employer national insurance and pension contributions that were claimed for perhaps when they ended, or where you've got an employee who was in a particular month was partially furloughed and partially working. Employers haven't restricted the claim for the employer national insurance and pension contribution to just the proportion of time the individual was furloughed, and instead making a claim for the entire month. The other area that we have these sorts of issues is around ineligible claims being made, and that might be because the employee is ineligible, perhaps because they've undertaken work whilst being furloughed, so that nullifies the ability to make a claim, or where the employer hasn't paid over the full amount of the grant that they've received. So the employee hasn't received minimum furlough pay, in which case that grant is ineligible, and is due to be repaid back to Hmrc. Another area and another particular concern is around actually, is the claim itself valid? And what we mean by that is there is a requirement on the business to have experienced an impact because of COVID that has caused them to need to put their employees on furlough. And in a practical sense, what that means is that the scheme shouldn't be used where there hasn't been an impact on the business because of COVID. And a particular area here where we're picking up on issues is around employers making claims for employees that they've perhaps put on furlough because the employer said to them they're going to take annual leave. We tend to see a spike in claims around December 2020, January 21, where a business is perhaps closed down over the Christmas period and employees have taken holiday. And rather than the business absorbing the cost of that holiday as a business cost, they have put employees on furlough for that period and looking to make a grant claim there. Clearly, where the only reason that employee has been put on furlough is because they're taking holiday over Christmas, that isn't going to be a valid claim. One final area that I wanted to touch on is national minimum wage. Now, national minimum wage is becoming a concern because what we've seen over the last 5 years or so is the growth in national minimum wage outstripping wage growth. And that isn't unintentional. It's a stated government aim to have national minimum wage represent 2/3 of UK average earnings by 2024. The problem with that comes in that having these substantial increases in national minimum wage is actually reducing or increasing, sorry, the amount of people that are paid at or close to national minimum wage. To put that into a bit of context, the current UK average wage is something like £31,500. So 2/3 of that is £21,000. I live in Cornwall, and in Cornwall, the current average earnings is £20,700. So you can see here that just outside of maybe the southeast, within the regions, within these low-paid industries, as we get to that 2/3 point by 2024, more and more employers are going to find that their employees are paid at or below national minimum wage. And that's going to cause significant problems, and is already starting to cause significant problems. Away from the headline rate that's being paid to the employees, you've also got a piece of legislation in the national minimum wage that is very technical, and it's not just about the headline rate that's paid to the employees. There is technicalities around the number of working hours and deductions from pay that can have an impact on whether you are considered to be paying national minimum wage for an employee. To give an example of that, Middlesbrough Football Club were recently picked up as having breached national minimum wage. And the reason for that was that the club, obviously a lot of the employees in the club are supporters of the club and have season tickets at the club. And the club introduced a scheme where employees could have a monthly deduction from their pay to cover the cost of a season ticket over a 12-month period, rather than paying upfront a significant amount in July or August at the start of the football season. The problem with that is that Hmrc said that the club was benefiting from the having an additional season ticket sale. So irrespective of the fact that the employee was happy and wanted the deductions to be made, because the employer was benefiting, that caused a national minimum wage, a reduction in pay for national minimum wage purposes. And it's quite interesting reading the comments from the chairman around that inquiry, and his thoughts on Hmrc's approach to national minimum wage is quite colourful. If you've got the time, I suggest it might be worthwhile having a read of it, because it's quite entertaining. The final area I wanted to touch on was around working hours. Now, in the post-COVID world, what we've seen is employers giving employees that much more flexibility in the way in which they work, introducing flexible working arrangements whereby the employee might work an extra few hours in 1 month and then take that as additional annual leave in a couple of months' time, which on the face of it is great for the employee. It's something they want to do, and the employer doesn't see any harm in that. But the problem that we've got is that national minimum wage is reviewed on a pay period by pay period basis. So in that first pay period, the employee's pay hasn't changed, but the number of hours that they've worked in that period has increased. So when you divide the pay that has been received against the number of hours worked, it's reducing pay for national minimum wage purposes. So irrespective of them taking that at a later date, there is a national minimum wage breach in that first month. So as I say, it's a very technical piece of legislation, and a reason why businesses and buyers are looking at this as an area of concern on due diligence. Marie, I think that's probably everything from me that I wanted to touch on. Is there any questions at all?
There is actually, yeah, thanks, Scott. That was very full and a very informed session there. It sparked quite a few questions. So I'm going to get through as many of them as I can do in the time that we've got. So first question up from Simon here. So Simon's asked, could you please define the difference being in IR35 and outside IR35? I understand IR35, but confusing the term in scope and out of scope.
Okay, so essentially, and again, we'll probably do a whole session on IR35 and off-payroll working separate to this, but away from the director's point and the office holder's point, there is no statutory employment test in the UK. So where you're in scope of IR35, essentially it means you're caught to the IR35 legislation. Where you're outside, it means that somebody has reviewed the employment status of the individual and found actually the way in which they're working is not that of a deemed employment, and they are genuinely self-employed if they were working directly as an employee-employer relationship.
Great stuff, thank you. Hopefully that gives Simon the information he needs. Moving on to a question from Alex here. So the question reads, if we have a client that has an employment tax issue, what is the best way to address it with Hmrc and the purchasers?
Okay, so I guess it depends on when the issues come up. So if it's something that the business isn't in the process yet of being sold and it's just like looking to correct the error before perhaps going through the due diligence process, then the best way to deal with that would be a voluntary disclosure to Hmrc. And we actually have very good links with the head of the employment tax disclosure team, and are able to get voluntary disclosures completed quite quickly and at a pretty reasonable term, so reduction in penalties, those sorts of things. If you're already going through the due diligence process, it comes back to negotiations with the buy side and sort of thinking, okay, can we look to make a disclosure now? Can we reduce the scope of this error in some way, offsets for taxes already paid elsewhere, those sorts of things. And actually just trying to take control of the arrangement. So it might be that you agree post-completion to make a voluntary disclosure, but it's perhaps important to think about who's making that voluntary disclosure, because ultimately it will be the seller who's going to bear the cost of that, any potential tax liability. So you would want to have some control over that process.
Right, that's great, thank you. Just one last one that we've got time for, I think, from Helen here. So Helen's asked that there always seems to be news articles about large employers, which are often household names, paying below national minimum wage. Why is this?
Yeah, so it's something Hmrc publish a list. So anybody who has been found in breach of national minimum wage of more than £500 gross across the employee population is named and shamed by Hmrc as part of their policy. So every 6 months, they publish a list of minimum wage defaulters. Large companies, you think, yeah, it shouldn't be happening to household names, but the reason it is happening is because of these technicalities. So and there's usually a statement that comes out from these large employers that says it wasn't an intentional breach, it was due to the technicalities of the legislation. So it kind of underscores the point that this is an area of concern, and it's a hard area to get right because of the technicalities there.
That's great. Thank you very much. I think that's about all the time we've got, I'm afraid. So any of the remaining questions I've got, I will pass over to you after this session, Scott, as promised. Moving on to our next speaker in that case. So I am absolutely delighted to introduce you all to my colleague, David Bell. Now, David is a fellow managing director along with me. David works in the forensic accounting and investigations team here at Quantuma, whereas I don't, and he's based in Glasgow. David's primary areas of focus are commercial disputes and expert witness work and fraud investigations. He's an experienced expert witness who has given evidence in Scotland and England. David, over to you.
Thanks, Marie. Morning, everybody. So this morning, I'm going to look at some recent fraud trends and what we are seeing in the market. I'm going to try and cover 3 areas in my time allocation. The first is fraud on the increase currently? And probably no surprise, spoiler alert, it is on the increase. Second of all, we're going to look at what's driving that increase in fraud. And then thirdly, look at some examples of kind of recent investigations that we've been involved in so that we can tell you what we're seeing in the market in terms of investigations. So first of all, yeah, fraud is on the increase. There's no doubt about that. The number or volume of frauds being carried out is increasing. It has been over recent years, and I don't see that changing in the coming years going forwards. I think you only have to look at some of the headlines recently from market and kind of recent events. You know, you've got, I think the last number I saw was over £5 billion of furlough and bounce back loan payments were paid out due to fraud and error. I mean, that's an eye-watering value of frauds, and that, I mean, it's not really a criticism in Hmrc because they had to get that money out quite quickly and they did a good job of doing it. But I mean, that was a real open goal for not just organised criminals, but also for what would you class as normal individuals or normal businesses that thought, hang on a minute, there might be an opportunity here to just take a little bit more money, and by the end of the day, that's fraud. But it's not just furlough or pandemic related fraud that's rising. There's a general increase being seen as well. And even things like cryptocurrency fraud, you know, it wasn't that many years ago that we didn't really know about cryptocurrency. In fact, you'd say the same about furlough. You didn't really know about furlough until the pandemic came along, or certainly the vast majority of people didn't know about it. So where you have the market and society and technology evolving, so does the opportunity to carry out fraud in new and different ways. So what's driving this increase in fraud? Well, looking at a combination of what we're seeing in the kind of current economic and social landscape, that's relevant, and also looking at a kind of overlaying the fraud triangle on that. And I'm not going to get into a detailed discussion around the theory of fraud, but basically the fraud triangle says that there's normally 3 elements that need to exist when somebody carries out a fraud, and that's that there needs to be an opportunity to carry out fraud. There needs to be some kind of financial pressure or financial incentive, and that there's some kind of rationalisation that the individual that's carrying out the fraud, they can rationalise what they're doing. So if you look at what's happened recently, well, the change in working patterns and physical working locations during the pandemic, that's created an opportunity for people to exploit these new ways of working. And companies, they've had to place a lot more trust in employees, so that also helps with the opportunity side of it. The financial pressure incentive side is fairly straightforward. You know, the cost of living is going way up. There was financial pressure on people caused by the pandemic. You know, might they lose their jobs? Some people did lose their jobs. So there's definitely an increase in financial pressure there. Rationalisation is a trickier one because people rationalise things in different ways. But put simply, there was a lot more pressure, not financial pressure, but just pressure on people when they were having to work from home. They may not have got pay rises or bonuses during the pandemic. They may have heard of other people not having to work and getting paid furlough, or they were paid furlough but not getting full salary. So they can rationalise it in a way where they say, well, actually, the business owes me money, or I'm just taking my fair share because I'm still putting in a hard shift. I'm not saying it's right, but that's how some people see things. Also, technology is an enabler of fraud. We've all been forced online a lot more over the past 2 years. And again, that opens up opportunity for online payment fraud and things like that. So what are we seeing as types of fraud in the market just now? I think the 2 main types of fraud that we're coming across, there's the cyber threat and insider threat. Now, cyber threat it's not as quite probably complicated or kind of high flying as it sounds. It's basically some kind of online fraud, and whether that's to defraud a business or an individual of their finances, there's a lot more of that going on now. But it's not just I say good old-fashioned stealing money. There's a lot of data being subject to fraud as well. People going online, stealing, whether it's personal data, employees' data, customers, products, and so on, either to sell on to third parties for some kind of financial gain, or sometimes just to cause problems. You know, people hacking in, shutting down, whether it's government agencies, whether it's just company websites and so on, not necessarily for financial gain, but just to cause problem. And then insider threats. When we talk about insider threat, it's basically frauds carried out by employees within a business or within an organization. And that, I would say, is by far the biggest types of fraud that we see in the kind of normal everyday companies and organizations and what we investigate. And this itself has increased, or the risk of these types of frauds has increased during the pandemic, because you've got a couple of factors here. First of all, there's a lack of visibility. Employees, if they're working from home and not sitting in the office with their colleagues and their bosses and management, they think there's a lower chance of them being caught because it's kind of, they're out of sight from their bosses. Second of all, management, their focus probably hasn't been on the kind of normal reporting structures and the controls and the procedures that existed, or that existed pre-pandemic, they still exist now, but their focus has probably been on business survival or the mental health of their employees and colleagues and so on. So there is increased risk on those two parts. But it's not often new types of fraud that we are seeing. It's say like in the way that things are carried out. It's arguably it's mostly embezzlement of cash when it's insider threat, or misappropriation of assets. They're the kind of most common frauds. And it never fails to amaze me when you investigate fraud as to how somebody's got away with it for so long, or how simple a fraud can be, or how simple a control is that has failed that allowed this fraud to happen, or a control that management thought was in place, but it wasn't in place or simply didn't exist. So, and also another point I would say there is the culture within an organization. The culture in an organization is really important as part of a kind of the mitigation of fraud. So what I wanted to do now is just run through a couple of recent examples of frauds that we've seen and that we've investigated, just to give you an idea of what's happening out there, but not to give you any ideas. Both of these get uncovered and investigated, so don't get any ideas. The first one's a payroll fraud, or primarily a payroll fraud. And this was, so the background to this, it was a facilities management business. One of their main customers was a UK customer. It had multiple sites across the UK, many locations. The facilities management business would send out people to carry out work at all these different sites. And this payroll fraud involved the frontline workers, but also it involved a number of management employees as well. So as soon as you've got collusion in some kind of fraudulent scheme, it makes it easier to bypass controls, and also makes it harder to spot, basically. And what was happening here was that when the frontline workers were going out to do their work on site, they would ping in and effectively check in online on an app on their phone. And it's like your kind of old-fashioned clock in, clock out cards, albeit it was done on an app. So they would ping in when they start a shift and ping out when they started their shift, and then that would obviously go into their timesheet records and they'd get paid for it. The problem with this app is that there's no GPS check on it. So you could be sitting in your bedroom at home and effectively ping into your work 20 miles away, ping out 8 hours later, and that time would be recorded and you'd therefore get paid for it. What you could also do is ping into different locations at the same time, which clearly is a major weakness. So when we investigated it, you found that some people were in different places at the same time, recording hours and getting paid for it. This was uncovered it was a whistleblower report that got submitted. We were brought in to investigate it. The lawyers did a very good job as well. They got a Norwich Pharmacal order for, I think there was 12 individuals, 12 employees. So we got copies of all their bank statements from, I think it was like 5 or 6 main banks. And our work was mostly a kind of flow of funds analysis and investigation that way. So it was looking at what funds were coming into these individuals against what they should have been paid, and then what happened with those funds. And it's what happened with those funds that was the kind of almost the more important bit here. So it was like, who was really benefiting from this fraud? And what was happening is like the guys on the ground were being paid extra. They were keeping their cut of it, but then they were passing the majority of the money back up to the managers in the business that were involved in this fraud. So what was key to this was the way that we kind of presented the data, because when you're faced with literally thousands and thousands of lines of Excel spreadsheets, it's really hard to make that easy to understand. But using data analytics to plow through lots of information, but also using like Microsoft Power BI and tools like that to make sure that when you're presenting it, it's done in a kind of dashboard style and a graphical way, so that you could say, well, look, here's how the flow of funds happened, here's where the money came from, here's where it ended up, here's who got what share of it. That makes it easier for the courts and for the company to understand it. That was quite a fairly sophisticated fraud, albeit it was allowed to happen because of a very basic control that didn't exist. The second fraud I was going to talk about is certainly not as sophisticated, but still of a decent value. So this was a kind of supplier fraud, probably we'd call it, and it was in the public sector. It was a public sector organisation. An individual who was head of an estates department. He'd been in post for, I think, 12 years or something like that. He resigned and left, and the new person that went in to replace him started getting into the information and queried some payments to a supplier and also the volume of money going to a supplier. We went in to investigate it, and it turns out there was just over £4 million had been paid to this supplier over a period of about 6 years. When we started investigating it, and you ask questions of people and interviewed people, nobody knew anything about this supplier. There was no goods bought from the supplier that anybody was aware of. And yeah, it turns out that this money was just paid out, and it shouldn't have been. So what happened here, we did e-discovery on his laptop, and sure enough, he found on his old work laptop lots of PDF invoices and Word versions of PDF invoices. So he'd been creating purchase invoices to purchase goods from this supplier, so cleaning products, either posting them into his work or possibly just taking them into work. There was a complete breakdown of controls. There was no segregation of duties. So he, as the head of the estates department, approved these invoices, passed them to one of the accounts clerks. They would include them in the payment run. He would then authorise payment run. These payments were going out. He was in charge of creating budgets for the estates department. He was in charge of reviewing any overspend against budgets. There was no real oversight of this department. It was kind of devolved powers. That was the way that the public organisation was run. And it was your kind of typical, he was a bit of a bully, so nobody wanted to stand up to him. He was the boss. And yeah, over £4 million had been paid out. And we're assuming that he got some kind of fairly chunky kickback from the supplier for that, but it was handed over to the police. So we never actually got to find out what happened to him in the end. So to sum up, we're definitely seeing an increase in fraud. It's not going to change anytime in the near future. The vast majority of embezzlement or misappropriation of asset type frauds occur due to pretty simple controls either not being present or not being effective. Segregation of duties is key, and it's within organisations' control to stop that, to stop frauds from happening more often than not. So that's all I wanted to say this morning. If there's time for any Q&A, Marie, I'm happy to answer.
Thank you very much, David. You live in a very interesting world by the sounds of it.
We like to pretend it's the kind of Hollywood end of accountancy, but yeah, it's often not.
It sounds like it, blimey. Right, I have another question from Simon here. So I'm going to read it as it's written so that I don't lose any context here. So I'm thinking of changing my job, but most jobs require one to work remotely. How does one establish trust with the new employer if the technology plays up? How can the employer trust me that I am trying to work, but IT is preventing me from doing so?
It's a good question. And I think, well, what I mentioned culture earlier. Culture comes into this, and I think the onus isn't on you to prove to the employer that he can trust you. The employer, I think now, the kind of default position is that they do trust their employees to work remotely, and I think that's definitely changed. You know, pre-pandemic, I know I was like, I used to generally kind of work from home 1 day a week pre-pandemic, and you would feel kind of not nervous, but you think, oh, do people think I'm working? So you'd make sure you send an email to somebody early in the morning so that they knew that you were working, and then, you know, make sure you send something late at night. That's not the case anymore, because everybody, there is more trust now. There has to be more trust, and cultures have changed, and also working patterns have changed. People appreciate that people don't always work 9 to 5 now. Some people work earlier, work later. So yeah, I think if the employer doesn't trust you, you should be more concerned about that employer than them being concerned about you.
Okay, that's great. Thank you. I do have a couple more questions, but I think I'm going to hold those and pass them on to you after the session in the interests of sort of, I think we are overrunning slightly, so in the interest of catching up a little bit. So thank you very much, David. That was very interesting. Over to our final speaker now for this part of the session. So I'm very pleased to be able to welcome a new colleague of mine, Kayleigh Everson. Kayleigh is a tax manager at K3 Tax Advisor and is a colleague of Scott, who spoke earlier. Kayleigh is qualified as a chartered tax advisor and is currently working towards her advanced diploma in international taxes. She has more than 10 years experience since first starting with a Big Four firm in the Thames Valley before she relocated to the Southwest. Kayleigh, welcome, and over to you.
Thanks, Marie, and good morning, everybody. Thank you for joining. So today I'm going to be talking through international working and hopefully give you some ideas that you can discuss with your own employees and your clients to take forward. So the topics I'm hoping to cover today are to discuss the trends that we're seeing in the market at the moment, the income tax considerations that you need for your own payroll and perhaps international payroll, national insurance and social security contributions, both for the employer and the employee, some very high level stuff on corporation tax considerations, benefits packages, and if we've got time at the end, I'll run through a case study before I take some questions. So in terms of trends we're seeing in the market, if I think back to 2020, I felt certainly very concerned that COVID was restricting a lot of international travel. And I did think the opportunity to give this kind of advice would be drying up. But, you know, 2 years into the pandemic, we're seeing actually more international travel than we were before. But particularly, we're seeing two very specific trends. And these are, the first type of worker are people who have emigrated into the UK for work originally. They're not originally from the UK. They've come here for the opportunity, but they've found out that actually due to COVID, they can work remotely and they still have their extended family back in their country of origin. And they're now looking to relocate back on a kind of more permanent basis, certainly for at least a year. And the second type of trend that we're seeing is what I like to call the destination worker. So these tend to be your more senior employees, tend to be the higher earners, and they've discovered that due to remote working, they can go on that skiing holiday. Let's make it a month. Let's spend some time in the Alps. They can take their laptop down to the beach and have that really nice summer away. And so they are only going on short-term visits, but they are still working whilst they're there. And so I'll just cover off the kind of things that you need to be thinking about as an employer or for your own clients when you come across these two situations. So the first thing I usually do whenever I approach topics like this is think about the income tax position. And usually that will start with a review of that employee's residency in the UK under the statutory residency test. So why that's important: if the employee remains UK tax resident, there will likely be a requirement for them to stay on a UK payroll, as they are now. So where we have our workers who are returning permanently, you may find that they no longer need to be on that UK payroll, whereas your destination workers are likely to still need to stay on your UK payroll. Where somebody's going longer term and they perhaps don't have treaty protection in the other country they're going to, you might find that there's a requirement to set up a payroll in that other country. And so you then need to consider, what if that employee is taxed twice? Do they have any protections? Is there anything we can put in place to make sure that their cash flow is not adversely affected? Luckily, Hmrc has quite a few relaxations when it comes to that. And so it's usually possible to make sure that the employee is not double taxed. Moving on then to national insurance, the general position is that national insurance or social security should be paid in the location that the employee is performing their duties, and the employer's position follows the employee's. So what you might find is, if somebody relocates to France, suddenly you as a UK business might find that you have an obligation to French social security, which is actually quite a lot more expensive than UK national insurance. And so because that's the basic position, it does need to be thought about before the employee goes, ideally. Where we have these destination workers, or where people are not going for a prolonged period of time, it's actually possible to remain in the UK national insurance system. You can make an application to Hmrc, they generally accept it, and then you can present that to the other country and say, look, this employee is not going to be with you long term. They would like to retain the benefit of paying into their home country's social security regime. And for example, in the UK, that would give them the protection of remaining in the state pension. So that is possible. But as I mentioned with that example with France, it's really important to look at social security, because the UK has got one of the lowest rates. And so where an employee goes and they perhaps haven't told you, you might be hit with an unexpected tax bill. So thinking about employees going overseas, it's really important to think about their duties. What is it they're going to be doing in country? And when you look at the double tax treaties between the UK and various other countries, you'll see that there is Article 5 most of the time. It's known as a permanent establishment or branch. And depending on the activity of the employee in country, they could be subjecting the UK business to corporation tax of that second country. And so what we would want to do is have a look at what the employee's duties are, especially the more senior employees who are destination workers, to see whether or not they meet any of the conditions in the double tax treaty that could cause a corporation tax liability. When employees go overseas, traditionally, they were going on secondments. And so employers were thinking about, what kind of benefit package can I offer? Can I pay for tax-free travel? Can I give them a per diem tax-free? And now actually what we're seeing in the market is a lot of employee-led travel. And so because it's not wholly exclusively necessary for the business, a lot of the tax-free element has been withdrawn. And so we do think when somebody goes overseas, it's a really good time to have a look at the benefits that are being provided and seeing what we can do to structure that in a tax efficient way. So that's a very kind of high level overview of the things we consider when somebody wants to move overseas. I think I have just enough time to talk about my own experience with international working and touch upon how I followed those steps myself. This summer, I'm hoping to spend the summer over in Budapest. And so I run through the steps I talked about earlier. I thought about income tax. I'm not going to be gone long enough to lose my UK residency. Similarly, I'm not going to be in Hungary long enough to obtain Hungarian residence. And so my income tax liability remains in the UK, and I'll remain on my employer's payroll in the UK. And there's no need for me to pay Hungarian income tax. National insurance, well, you pay where you work. So I would have an obligation to Hungarian social security, which I believe is more expensive than UK national insurance. However, I'm working with my employer to make that application to Hmrc so that I can remain in the UK national insurance system and just pay as I would normally on my UK payroll. I'm not going to be undertaking any duties in Hungary that would cause my company to be subject to Hungarian corporation tax, so that's fine. And because it's employee-led, it's a decision I've made myself. actually, there's been no need to change my remuneration package as a result of that. So that's kind of just a very quick overview of the sorts of things we think about when we have international workers. If I could bring Marie back in just to see whether there's any questions.
That was great. I hadn't realised you were going off to Budapest. That's very interesting.
I'm very excited. Yeah.
I bet you are. So, what actually a related question has come in. So, with regards to secondments. So, the question reads: how soon ahead of a secondment or travel overseas for work should the employee and employer start planning?
Well, ideally as soon as possible. What we're seeing at the moment with Hmrc when we're making these applications is a lot of delays. So a lot of Hmrc workers, because of COVID, have been pulled out of their normal role. And so where it previously was taking maybe 4 weeks to get an application approved by Hmrc, it's now taking a bit longer. And so the sooner we know, we can start looking at things like, how is the employee's residency going to be affected? Do we need to make any applications to Hmrc? We can even plan around specific dates so that it's sort of in both employee and employer's interests. So yeah, as soon as possible.
That's great. Thank you very much. And thank you to you for making your K3 Hub debut today. Right, okay, well that draws to the end, the first part of today's session. Thank you to everybody who has spoken and to everybody that's submitted your questions. I hope that we've given you some robust answers. For those questions that we haven't managed to get, I will pass them on to the relevant speakers and they will come back to you sort of shortly after this session. So moving on to our second session, I can see that Shane's just joined me on screen. So I'd like to welcome back Shane, who is our regular returning special guest speaker. Shane is Managing Director of AVN. AVN offer coaching and training to assist in transforming professional practices into rewarding businesses. So today, Shane's session is all about how to attract your ideal client, which all of us need on this, call. So I understand that amongst other things, he'll cover typical challenges you may face when taking on just any client, 7 factors to consider when defining your ideal client, and then 3 effective ways to attract your ideal client. Shane, thank you very much for returning, and I'll hand straight over to you.
Thank you very much, Marie. I really appreciate that introduction. I'm just going to spotlight myself for everybody as well, and say welcome. Thank you very much for joining me. Now, I gather the chat box is being switched on and enabled right now, so please do let me know that you've got that. So that you can say hello in the chat box. I always like to see that people are here, they're present in the moment, and that there are nice people at the end of it are going to say hello to me. So just a quick hello in the chat box, and I will begin. So wonderful. Oh, hello, Simon. I recognise your name. I think you're on a recent webinar just yesterday, weren't you? So fantastic that you're here today. Welcome. Some more hellos in the chat box would be absolutely fantastic. Thank you very much for that, Marie. And yeah, look, let's begin. I have literally squeezed a half-day session I would normally run with my clients into this 45-minute session. So it is going to be absolutely action-packed, fast-paced. Please have your pen and paper ready. I'm going to give you a specific strategy at the end of this as well, an 8-step process that you'll really want to write down and make a note of. I've only had a couple of hellos in the chat box. Please don't be chat box shy. It's just literally a few key presses. Just say hello in there. And again, lets me know that you're here, you're present in the moment. And look, I mean, how important is it to you to define your ideal client, but more importantly than that, to attract more of them? Because I know when I speak to a lot of people in professional services in general, yet alone the accountants that I specialise in, that actually, you know, that there's often the feeling that, well, you know, any income is great income. It's good to take on any client, but actually there are lots of problems that come with that. So anyway, let us begin. First of all, let me just share with you. Let me just start by saying, look, if I can share with you a couple of golden nuggets that you can take away from this session and apply to your business, will that be worth coming? Now, you don't, because there's this chat box shyness, you don't have to answer in the chat box, although I'd be very grateful if you did, a yes or no. But hopefully that's my aim for today, just to give you a couple of golden nuggets that you can take away and make your business just a little bit better. Okay, so in the next 45 minutes, 43 possibly now, I'm going to share with you why it's so important to define your ideal client. 4 considerations to define your ideal client, making the most of your existing client, and then 3 proven ways to attract more of your ideal client. Okay, so let's just dive straight in. Why define an ideal client? Why is that so important? Why not just take on anybody? Look, let's face it, we all fish in the same ocean of clients. Some of us use the dragnet approach where we're just trying to get anybody, and some of us are a little bit more specific, but ultimately we're all fishing in that same ocean. Now, in that ocean, there are a variety of fish that I'm using as my metaphor for clients, and let's face it, within that we've got small clients, haven't we? We've got the painful clients, the ones that, oh my God, they're on the phone again, another email, I dread it, you know, when I've got to speak to this person. We've got the bottom feeders, the vampires, the bloodsuckers, the ones that will just take the life out of you. But in there as well, we've got quality clients. Now, there's something really important here. You know, when you are using that kind of catch-all net approach, taking on any referral from your clients, because let's face it, many of us grow through referrals, word-of-mouth referrals, which on the face of it sounds fantastic. I must be doing a great job. I'm being referred. But actually, you know, small clients refer small clients. Painful clients refer painful clients. Bottom feeders refer bottom feeders. And guess what? The quality clients are going to give you many more quality clients. So if we can just be focusing on working with these, then that's the type of referrals we're going to get more of as well. And there are many other benefits as well to just working with your quality clients, because in addition to quality clients referring quality clients, they're nicer to work with, they appreciate and respect you, they take on additional services, which means that they become much more profitable in themselves. They pay you more in the first place, and they make your life so much more enjoyable. Now, when you work with just anybody, bear in mind, I've been speaking to accountants for 24 years now, helping them improve their business. I hear these expressions so many times. I feel like I'm a slave to my clients. They expect me just to drop everything just to do what they want me to do, regardless of what other work I've got on. They demand rock bottom fees. They expect extra work was just included as part of the package. Surely you're my accountant, all of this extra work you've done for me is just part of the package, isn't it? They'll hold you to ransom. Well, if you can't do it, I'm sure the accountant down the road will happily take my money. They're unreceptive or reluctant to pay for business advisory, which I know many accountants are moving into now. But those clients, those types of clients, are just not receptive to it. They don't appreciate or respect you, and that just leaves you feeling that you're just doing an unfulfilling, unenjoyable, and not profitable job with these people. Now, there are many factors involved here, but actually one of the reasons why you've got this kind of catch-all net approach is because, I say I'm talking in general, many accountants out there, when I look at their websites, they might have their different images and different colours, but ultimately they all have very similar kinds of wording. They all say similar things. So we're accountants and business advisors. We're not like other accountants. We're different. We're proactive. We're forward thinking. But then, in addition to using those buzzwords, they all just go on to say, we do accounts, we do bookkeeping, we do payroll, we do whatever it might be. But there's no real differentiation in there. They're not talking to any specific client. They might say, we take on clients ranging from $500,000 to 20 million. When you're speaking to everybody, nobody's listening, because you're not resonating with any particular type of person. And quite frankly, you know, if you're speaking, and I use the website as one example here, by the way. This can be how you convey yourself at a networking event. It can be how you come across in an email or your newsletters, all of those different factors. So You know, the website is just one example. But when you're representing yourself very similar to your competitors, then from a customer's point of view, there's no real differentiator here apart from price. Well, they're all doing the same thing. I need compliance work doing. I'll just go for the cheapest price. But if you can actually just differentiate yourself, speak to your ideal client, then this potential customer might think, oh, they understand me, they get me. They obviously specialize in my kind of situation. And therefore, they'll see you as a specialist rather than a generalist, and they'll be happy to pay you much more. They'll choose you over and above the competition. Obviously, you know, if you continue to do what you've always done, you'll always get what you've always got. Or worse, because there's many, many, many more of those cheap accountants, and forgive my language on accountants, I know there are more than just accountants in here today, but many more doing exactly what you do, but will be happy to undercut you. Do you really want to be a cheap accountant, lawyer, whatever it is your industry is, or would you rather be an added value one, a specialist? Because firms that are doing things differently are getting radically different results. So how do you define your ideal client? Well, actually, there are 4 factors that I'm going to share with you in this session. And the first one is about, really, it has to start with you, because your personality and your client's personality, there has to be a degree of compatibility here. So again, just one aspect I'm going to share with you is how you connect with people in the outside world. Now, you know, I'm going to make this rhetorical given the absence of chat box interaction, but do you find that there are some people in your personal life, yet alone your business, that you can just connect with instantly, and there are other people that you just can't, for whatever reason, you just can't seem to connect with them. In fact, they cheese you off after a few minutes of talking. Well, look, one of the reasons for this, one of the things that makes us unique is our values and our beliefs. Our values are pretty much set in stone between the ages of 5 and 7. Our beliefs are, of course, subject to change. Once upon a time, people believed the earth was flat, but evidence proved that to be the contrary. It was round, and therefore our beliefs changed accordingly. There's a lot of text there, so I will read that, Jeff, but just in a few moments. But thank you for contributing. So as I say, this has to start with you, because actually the people in your life personally whose values and beliefs are a near perfect match, they tend to become your loved ones and your closest friends. The people whose values and beliefs are maybe a near match, they tend to become your mates at the pub, the gym, other activities where maybe you get on with them okay, but you wouldn't necessarily invite them back for a barbecue or dinner. And then you've got people in your life that because their values and beliefs are so opposed to yours, you just can't connect. Now, why is this important in business? Well, look, the same thing applies to both our team. The people whose values and beliefs are a near perfect match, they're loyal, they'll go the extra mile. They'll work 12 hours a day if need be without you asking them to, just to help your cause. The people whose values and beliefs are a near match, they're good workers. They're happy to tools down at their finishing time and go and just leave stuff for the day. They won't necessarily go the extra mile, but they're good workers. And then you've got the people at the opposite end, which sadly many people have got in their team. We call them the BMWs, bitchers, moaners and whingers. Bitching about this, complaining about that, especially when your back is turned. We call them terrorists, saboteurs. They'll do the minimum required to get by. And of course, at the other end of the spectrum then, importantly for today's session, is your clients. You will have the people whose values and beliefs are a close match to yours, and you will have people at the opposite end. Now, your A clients, the people whose values and beliefs are a near perfect match, these are your advocates. These are the people that will be forgiving if you happen to screw up with them. You can test out new things with them. They'll be happy to buy additional products that you might want to sell. So values are things that we hold dear to us. It's part of our upbringing. So on the very basic fundamental level, Simon, values might be honesty, integrity, you know, those types of things. But actually, we can go, everybody, every single person out there will say, oh yes, our values are honesty, integrity, quality. When I talk about values as well, it's maybe that next tier up from that as well, which is a little bit more unique to you. Okay. But actually, I'll share with you in a moment how you can find out a little bit more about that. As I say, the D's, these are the people who, they're also BMWs, bitches, moaners and whingers. Nothing's ever good enough, nothing's ever fast enough, nothing's ever cheap enough for them. They're always complaining. And actually, they take up a lot of your time. Now, the risk that you run here is that you as the business owner can end up spending a lot of your time with these people, trying to get them to come round to your way of thinking, and with these people, dealing with complaints, trying to make them happy, at the expense of these and these, who then feel neglected, and therefore maybe move elsewhere. Now look, if you want a little bit more information about values, number one, if you've got a copy of my book, which you can have for free, by the way, then there's a section in there about values in more detail and how you can define and understand what yours are. Likewise, I'll be very happy to send you that chapter. If you want to find me on LinkedIn, or if the contact details for me have been posted out, by all means, just get in touch with me and I'll happily send you that chapter as well. Or the full book, if you'd like it, on me. I'm happy to post it out to you. So just look, search me out and send me a message. Now, also, that's the personality design. That's just one element, of course. Also, decide what kind of services you want to offer to clients. Because actually, I speak to many accountants and say, obviously I train to do the compliance work, but it's really boring. There are other things that I'd love to be delivering much more. So what do they look like? Well, this pyramid represents the categories of services that an accountancy practice might offer to its clients. Most people are in this compliance area. So your bookkeeping, your payroll, your tax returns, your VAT returns, your year-end accounts. Some people enjoy delivering the business services, which is management accounts, cash flow forecasting, budgeting, and having the conversations around that and exploring the possibilities with clients. Some people enjoy delivering more the business advisory, providing a strategic input as more of a coaching, consulting session, maybe 2 hours a month, a quarter, a week, whatever it might be. And thank you for that, Simon, but you might just want to send me that individually because it'll disappear once I've finished. But yeah, by all means, happy to send you a free book. And then the final one on here is wealth strategies. So that's services such as exit planning, mergers and acquisitions, maybe even some financial services such as pensions. Now notice that the higher up in this pyramid you are offering services, the greater the fee income and the much more profitable it is. Clients, as long as you demonstrate the value here, will happily pay a premium for them, as long as you demonstrate the value to them. Even your most seemingly price sensitive clients, once you've opened their eyes to the possibility and demonstrated that, will happily pay a premium for them. When you're just down here, actually, that's where you can't charge that much because everybody's doing this. Then you have to work with a higher volume of customers to make that pay. Higher up, you can work with fewer. So look, part one of defining your ideal client is deciding, you want to work with people whose values and beliefs are very similar to yours, and who are going to be receptive to the types of services that you really want to deliver. So that's aspect one. The next couple, very quickly in this case, is the geographic and the demographic. So from a geographic point of view, decide where do you want your clients to be based. In this day and age, they can be based anywhere, can't they? So some of our clients, for example, the accountants that we work with, because they're dealing with everything on Zoom, and not just because of the pandemic, but certainly enabled far more because of the pandemic, they're taking on clients that meet their ideal client profile, but from anywhere in the UK. So that's widened their scope, even though they've fine-tuned still their ideal client profile. Maybe you'd rather have a cup of coffee face-to-face with somebody when you're having a conversation. So decide whereabouts you want them to be, but also the demographic. Are you interested in a specific industry? I'm not a great fan of niche purely to one industry, but if you have a specialised area, you know, a specialised knowledge in an area, then great, maybe target that kind of industry. Other factors, you know, how long have they been in industry? Do you prefer to work with startups, or do you absolutely not want to work with startups? What's the turnover range? Is it 500,000? If you say it's 500,000 to 20 million, it's too wide. You really need to narrow that down for this next box reasons, actually. There are lots of factors in the demographic as well that you might want to consider. I mean, I mentioned industry, but maybe you prefer to work with professional, the services industry, or the widget making industry, or logistics. You know, just decide what kind of industries you prefer to work with, or it may not be down to an industry. There can be other factors involved as well. Finally, this is the most important, but you can only really ascertain this one once you've ascertained the others. And that's, what problems do these people face? Now, if you're trying to be too broad, it's very difficult to say what the problems are, apart from the generic, oh, you're working too many hours, you'd like to work less, you want to earn more. They're generic, everybody's saying those things. What are the specific problems that your ideal client is facing? Because that's what's going to resonate. That's what's going to say to people, oh, they're talking to me, they understand me, they get me. So that has to be the final thing you do once you've ascertained what your ideal client looks like in these other areas. And even interview your existing clients that match those and find out what problems they've got. Because, as I say, that's going to enable you to resonate with them. So, for example, here's a website, one of our members, Libby Berg, when she went through this process, she understood exactly how to communicate with her existing client. On her first page, that's exactly what she's doing. She's relating. She's talking about, I understand the frustrations you have. You know, she's talking about all of the, I appreciate you can't read it, that's not the point. She's talking exactly to her ideal client. Anybody who comes along here and thinks, that's not me at all, great, because you're not my ideal client, you go find another accountant. I don't want to work with you. She has very clear, everybody's got an about us, she's got an about you as well. And on there, she's even more specific about her ideal client, who she wants to work with, but also who she doesn't. Okay, so we've got a match made in heaven, and absolutely, this ain't going to work. And she'll list those bullet points. So my recommendation to you is to do exactly that. And just think about, you know, the good things, but also the things that you don't want to work with as well, and maybe list those on your website. How do you make the most of those existing clients that you've got? Because, you know, it's always better to really make the most of your existing client base before you're trying to attract new ones as well. So I mentioned earlier about deciding what kind of services do you want to be offering in an ideal world. You know, many accountants I speak to love being in here, but many actually, they lack the confidence, they feel that they don't have the right clients to shift into that area. There are many factors involved there. Maybe they don't know how to deliver that, but that's not a problem. You know, that can be overcome, and very easily. It's something we've been teaching accountants to do for many years. What I'm talking about here is, what do you want to deliver if you could wave a magic wand, and be clear on that. Yeah, no problem, Bridget, and thank you for reaching out. Let's just say, for example, that this represents 100% of your client base. Now, one of the things that you can do, once you've identified your ideal client, is rank all of your clients against that. So the most closest are your A's, and then you've got your B's, your C's, and your D's. Okay, so then what you can do is start to approach your A's and talk about some of these additional services that you'd love to offer, because you'll find that these are incredibly receptive to it. So talk about that and sell those attractive solutions to them. And actually don't stop there, continue, because what you'll find is you'll start to upgrade some of those clients who are suddenly becoming much more profitable. Now you've opened their eyes to some of the possibilities, but you'll always have some people that just don't want to take that on. You've now got a choice, because you'll have upsold a load of brilliant packages that your clients will be grateful for, that you've told them about and happily paying for, which means you've replaced a lot of income, or you've added to your income and profitability. You can afford to part company with some of those clients that you're just not enjoying working with, that you fear when they call, and actually that frees up your time to spend much more quality time with these, and of course to specifically target more of these types of clients then to add to that brilliant A-type repertoire. So how do you do that? Let's have a look at how do you attract your ideal client. First of all, though, I'm just going to very briefly, I know that Marie kindly introduced me, but I'd just like to just share with you 3 or 4 minutes a little bit more about myself. So first of all, my name is Shane Lukas. I think you got that part at the beginning. My passion is actually around this word choice, and it's enabling better choice for people. Now, there are 3 levels around this. 1, the brain is ultimately responsible for choice, isn't it? That allows us to make those decisions. When the brain becomes injured and damaged in some way, that can seriously inhibit our ability to make choice. So personally, I run marathons, I do Ironmans, I raise money for charities that will help people recover from serious brain injury. From a lifestyle point of view, there are many people around the world that don't have the luxury of some of the choices that we get to take for granted. And that also includes UK, by the way. So through my business, AVN, we are giving on a regular basis to many, many, many charities all around the world to help allow people a better choice in their lifestyle, get access to education, fresh water, all of those types of factors. And of course, much close to home, there are many business owners, accountants, and no exception, that feel they have no choice but to keep working an endless amount of hours just to pay the bills, just to keep their clients happy, just to keep their family happy, often at the expense of not being able to spend the quality time they'd like to with their family. So again, enabling that choice for people. Over the years, I've authored and co-authored a number of books that really represent all of those passions of mine. I recently delivered a TED talk as well on why fear prevents us from taking important action in our lives and how to overcome that. So again, I recommend just search for that TED talk as well if fear is holding you back from certain activities that you might want to explore. And just very quickly then, a little bit about AVN. So we are first and foremost a coaching and training organisation for accountants. We're a global community. We have accountants all over the world now that we're working with, and we take them through our 7-stage proven methodology that helps them to achieve the level of success that they really strive towards. We've helped almost 4,000 accountants now over the past 24 years, and through those accountants we've positively impacted on over 1.2 million businesses because we've helped those accountants deliver much more of a business advisory solution. We've impacted on our global efforts, made over 11 million impacts. I'm incredibly proud about that. And collectively, the accountants that we've worked with, we've increased their revenue by over 650 million. I mentioned earlier our global givings. We are heavily aligned with the United Nations global goals, and everything that we're doing is impacting on these various goals as well. Finally, look, you know, it's not just about those numbers, is it? Our clients tell us that we've saved marriages. Children exist as a result of doing that. We've reduced blood pressures. We've enabled time on the golf course or those other fun activities. We've created incredible wealth and financial independence. We've enabled a greater sense of fulfillment. We've enabled the sale value to be much higher for an amazing retirement, and we've changed lives. Okay, back to attracting your ideal client. So again, just a few strategies here that you can look to implement. But first of all, it's really important to understand something. The buying habits of today are very, very different from what they were just a few years ago, and they're continuing to change because, let's face it, with the internet, we've got access to so many people now that we can explore. Once upon a time, maybe somebody might have walked down their local high street into the shop front of an accountant or whatever, you know, lawyer, and that was it because they didn't have very much choice. Maybe there might have been 2 or 3 on the high street. Now we've got a world of options ahead of us, so we do a lot more research. Now, ZMARC, you may well have heard of it. It's some research that Google did a few years ago, and it stands for Zero Moment of Truth. In other words, what does it take now for somebody to want to invest a significant amount of money? I'm not talking about going and buying a book, but actually a significant amount in somebody to have a service with them. Okay, so what they came up with was 3 numbers. And really, you know, when we're happy to buy from somebody, it's because we've reached a certain level of know, like, and trust. Okay, trust is the slowest one to build, of course, but we want to get to know somebody, actually like them and trust them. And that takes, on average, 7 hours, over 11 touch points, and 4 different locations. So let me just share a little bit more about that. The research actually also went on to say that when somebody wants to find out a little bit more about you, number one, they won't necessarily search your practice name. They will Google you by your name, not your practice name. Okay? Secondly, the majority will search for you, actually, the second majority, if I can say this properly, of people will search for you on LinkedIn first and foremost, by name again. What does your LinkedIn profile say about you? And does it say who you like to work with? And then the third majority of people will actually search for your website. So that's the third majority, not the first. So once they've found you, if they can find you, by the way, it's worth Googling yourself, they're much more likely to spend time reading your articles, watching your videos, and ultimately getting to know a little bit more about you as a person before they'll even make contact with you. And by the way, you know, many of you might get word of mouth referrals. Well, they will still be doing this. They'll be checking you out. They'll be finding a little bit more about you before they even get in touch or want to work with you. And it doesn't matter whether you've met them at a networking event, whether it's through advertising, social media, somebody searched for an accountant online or through telemarketing, they will still go through this process. I mean, a perfect example here, look, you know, if you were on the receiving end of this email or letter through the post, whatever, inviting you to come to an event, everything I've learned about business success, £195 from a guy called George Johnson, you'd think, who the hell is George Johnson? And you'd perhaps Google that name, look them up, or you might just think, oh, I don't know who that is, and get rid of it. Probably instantly, I would. But actually, I might be different if it was somebody who I knew and liked and trusted. Now, you may or may not like and trust Alan Sugar, but if you did, then, you know, you can make that decision so much quicker. So method number one then is to grow your online profile so that when people type in your name into Google, you will come up and they can find out a little bit more about you. Now you might say, oh Shane, social media, it's saturated, everybody's on there all of the time, I'd never stand out. You might just say, I don't have the time. Or you might say, actually, I'm outsourcing that already. I've got a company that takes care of all of my social media. Well, I'll come back to this, the outsourced side of it in a moment. But first of all, if you are skeptical about being more present on social media, let me just play a quick video from, again, one of our members who talks about the impact it's had for growing her profile.
Why is it important that you are raising your profile, and what are the things that you're doing?
It's just about telling the little stories that you have and talking about the things that come into your head. Just stick it on a LinkedIn post and stick it up there. It doesn't have to be, you don't have to think through, you know, a really careful blog and what you're going to say and how you're going to instruct people. It can be as simple as, you know, I saw this thing the other day and my thoughts on it were such and such. And you get feedback from people, especially if you tag other people into your posts. And actually it just raises your profile and makes people realize who you are as a person, rather than I'm telling you that your corporation tax is due. You know, whatever that might be is really boring and nobody's interested in it. But if I'm putting my personality across and saying, this is what I think about something, anybody got any comments? It's creating all of that profile around, hey, we're actually people here. We don't just sit and add sums up and things like that. We can actually talk to you on a person-to-person basis. And I guess that's my approach to LinkedIn.
So what would you say to somebody who says, I don't do social media as an accountant?
You're missing a trick. I don't understand. I don't compute. I don't do social media. The world is social media these days. You can't not do social media. If you don't want to do it in your private life, then fair enough. But in some way, you need to reach out to people. And that's what people are doing nowadays. They pick up their phone and they scroll through it. And almost everybody I know has got LinkedIn notifications pinging up on their phone all the time. And if people are sitting in a coffee shop, they're sitting waiting for somebody, they're on a train, they're on a bus, wherever they are, everybody is looking at their phone. What do you think they're looking at? Everybody else's posts if you're not posting. So how are you going to get known about? The traditional advertising doesn't happen anymore. It doesn't work. We still get accountants sending letters to us asking if we're looking for a new accountant for our business. You know, so mail targeting like that simply doesn't work. Perhaps telesales might work, but if you want to raise your profile, you need to be seen. You need to be out there, and where people are looking is on social media, whether you like it or not. It's, you know, get with the picture, or you'll become invisible.
Val Wishart there from the number. Well, actually, she's not from there anymore. She recently sold her practice, and is now currently touring the world. So and fair play to her as well. But actually, you know, she made a massive difference by raising her profile, and she was so shy beforehand. Look, you know, when I first took over this business, I was quite unknown. I was never the face of AVN. And I started marketing the customers of this business, or the prospective customers, should I say. And I was getting emails back saying, you know, you need to get to know me before you start to sell to me, Shane. And when I first discovered this research, I typed in my name into Google, and guess what? There were lots of Shane Lukas come up, but none of them with this version. So since then, since I started building up my profile, and literally just within 3 months of doing that, and I really did put a lot of focus in, then you type in my name now, as long as you spell it correctly, because my surname is spelled with a K, not a C, then you will find a full page of just this version of Shane Lukas. So anybody researching me will easily find information about me. And you can do exactly the same. Let me share with you just a few little different ways that you can do this to build that know, like and trust factor up. So this, for example, is Michael Hem. He's a member of ours. What he does, in addition to writing lots of blogs and posts, is he will have guest blogs on other people's websites, his customers or people who are doing podcasts. This was a recent podcast that he did with somebody. So actually, the more different places you can get your name out to, the better as well, because you're going to come up more in searches and people will get to know you. Okay? You want people to start to like you and see your true personality. Now, I've got a 20-second clip that I'm going to play here now. Now, the lady here is an accountant, Georgie. This is one of her clients. Now, they were actually doing a very serious topic, a very serious interview, but because the filming had a few of those mistakes and blunders in it, they chose to put those blunders in at the very beginning for the first 20 seconds. Now, tell me if you don't smile when you're watching this and think, actually, Georgie is a real human being. She's really, really funny. And I guarantee you'll probably like her.
How you doing?
Hi.
Hi. That's all fine. That's all fine. Let's go
at the camera.
Yeah. Okay. Hi, I'm here with Georgie. Oh, no, that's doing it. I have to close the Slack. Hi.
So it's just the outtakes, and then it went on to quite a serious topic where they didn't even smile during the video, but already we kind of got a bit of an emotional connection to Georgie there. And then finally it's the trust. Now, obviously trust takes longer. Trust can come from, yes, your qualifications, your accreditations, awards, those types of things that you can get, but also just providing value, case studies, testimonials, all of those things will then start to establish the trust. And that's kind of what it takes before people will come in. I'm not talking about the price sensitive ones that just want compliance work for next to nothing. I'm talking about the people that will want to invest a good amount of money with you for those additional services. Now, this research was a few years ago, and actually there's lots of theories to say these numbers have probably doubled by now. So you've really got to be putting stuff out there. So what should you post? Well, first of all, please don't get on that plain vanilla outsourced content train where they're just putting technical updates, tax-related updates. They're important, but they're not you as a person. People buy people, okay? So just In addition to those, maybe start to just come across as a human being. One great way of doing this, by the way, I think it's a slide coming up, but I might as well do it now, is this is how Val Wishart, that you've just heard from, started off. She'd take a phone call from a client with maybe a query, and then all she'd do is she'd grab a phone and say, stick it straight onto video record, just had this question from a client, XYZ, here's the answer that I gave them. I hope you find that useful yourself. Let me know in the chat box, the comment box if you do, or direct comment me if you want to talk more about this. Hope you have a great day. Just little things like that. And then, 30 seconds, post it up, that's some content. How many phone calls a day or a week was she getting from clients? She just did that every single time. Very quick, very simple, but it got her out there. So just speak to the camera or just type a few words. Don't spend hours trying to perfect something. I know in general, accountants are perfectionists, but actually it doesn't have to be anything like perfect. Just write a few words out there with if hopefully this has helped, but if you want a little bit more information, get in touch by all means. Outsource by all means though. Outsource, but don't outsource the content, repurpose your content. So for example, what I just did to the camera, you could send that video off to an outsourcer who can then create some tweets, who can make it from a video into a blog or even an audio and put it out there into different places. Well, they can schedule it and post it and do the SEO and all of that lot. That's leveraging your time, but don't outsource your personality because it's not possible. That has to come from you. Few rules. Make sure it's not self-promoting. Don't be just sell, sell, sell. I would recommend never sell, sell, sell. Some people might say, well, do a bit of a plug, maybe 1 in 4 or 5 posts. I say just give value because people will come to you. So pure value. Make it regular as you can. Once a month's nothing like, even once a week's not enough. 2-3 times a week. Have a clear call to action. Direct message me for any questions or comment for questions or just, check out more info here. They're fine. That's not a problem. People are then coming to you rather than you plugging something. But you've got to measure this. If you're investing time, you've got to measure it. It's not about the likes, comments, or shares. That's meaningless information. Ultimately, it's about the money in the bank. Is this attracting new clients for you? Now, it will take time for that know, like, and trust to build up, but eventually you want to be able to see that people are coming your way because of this stuff. One of our member firms, when he first started doing this on YouTube, he was getting next to nothing. Now he's getting literally 300,000 views on his YouTubes, and he's getting so many clients, so many prospective clients approaching them. He's had to employ a full sales team to filter those down to ideal clients and then just take on the ones. He has grown significantly, and this is just in the last 2 years this month since he joined us. So again, making sure that people are checking out your profile, that's a measure. If they're clicking onto your LinkedIn profile to find out more about you, or visiting your website, or whatever the mechanisms that you have in place, are they making inquiries? Make sure that you're measuring this stuff, and ultimately it's putting money in the bank. Method 2 then is get where your ideal clients are. Okay, you may prefer one platform. Maybe it's LinkedIn, maybe it's Facebook. Your perfect client might be on TikTok or one of these other many social media platforms. You have to be where your ideal client is, and you have to understand how that platform works because they're all different. Yeah, a post on Facebook might be a different style of post for LinkedIn, which might be a different style of post for Twitter or TikTok. So find out where they are, and I would suggest go a step further because you're right, it is saturated. But actually, if you get into the groups, your engineering client might be in an engineering group where other engineers are, and they'll be posing questions all the time. They may be venting frustrations. You can be in there reading these things and giving the odd tip. That's going to get people to look you up, and you know that you're in front of that kind of client. Proactively get the referrals that you want is number 3. Word of mouth is great. By the way, this is like 2 or 3 minutes now. I think we are over the 10, but I did start a couple of minutes late, didn't I? So please just bear with me for that extra 2 or 3 minutes. Getting referrals is the best and free way to get clients, by all means. But this is a way of proactively making sure that you get the types of referrals that you really want. Because when it comes to referrals, there are two mistakes that people make. People in business in general. One is they don't ask for referrals. They hope they'll come in. They do get them, but they don't necessarily get the types of referrals that they want. So not asking is a massively missed opportunity. And then the second mistake is they don't ask properly. They might say, oh, do you know anyone you could refer to us? When you say, do you know anyone? Number one, that's a yes, no question. Of course, yeah, I know lots of people, but no one springs to mind. That's because you haven't painted a picture in their head as to who you want to work with. So I'm going to give you a strategy here to write down, okay? This works. It doesn't matter what business you're in. This works, and it is so effective. One of our members, when he joined us, was turning over just 50K, and by implementing this one strategy alone, he grew from 50K to over $1 million in 4 years organically through this one strategy. Okay, now, one other mistake related to this is the people who it doesn't work for is because they've changed it to make it more comfortable. Yes, there might be a couple of elements here that might feel a little bit uncomfortable, but actually that's a mindset. The reality when you do this is that people don't think anything of it, they don't bat an eyelid, and they're very happy to give you these referrals. It is really effective. So please don't change it. If you're going to make a loaf of bread and you exchange flour for coffee beans, you ain't going to get a loaf of bread. So please don't change this method. So first of all, only do this with your A clients, and actually only do this at the time you've delivered some value, and ask them the question, has this been valuable to you? Because you want a yes, you want them nodding. Yes, it has been valuable. If they say no, forget the rest, deal with the problem. Okay, the next part then is set the scene and a little bit of flattery. So what do I mean by that? Hi there, Joe. Look, right now, I've actually got a bit of capacity. I'm looking to scale up, whatever language you want to use. I'm looking to take on another couple of clients. I really enjoy working with you. And actually, I want to work with more people just like you. So there's a bit of flattery there. 3, this is where you have to tell them the type of client that you want to work with. Look, I'm very specific about who I want to work with. Let me just share with you very briefly my ideal client. And you want to get that into just 1 or 2 sentences then that just explain that. What you're doing here is you're painting a picture in somebody's head. If I said, do you know anyone? Yeah, I do. If I said, do you know somebody with brown hair with a parting down one side that wears glasses, likes to wear a suit and tie, then actually somebody may or may not come into your head right now, because I'm narrowing the kind of criteria that your brain's going through. So this is what you're doing by describing your ideal client. Then, really powerful question is, do you know anyone? It's not that. It's not, do you know anyone? It's, who do you know that fits that description? So in other words, you're looking for a name here. Not do you know anyone, but who do you know that fits that description? They may say, yeah, actually I do. I know Fred Bloggs. Great, write that name down. Then ask, who else do you know that fits that description? You might get another couple of names if you repeat that. Then go back to the first one and say, look, just tell me a little bit more about Fred. Okay, look, Fred is somebody I'd really, really like to have a coffee with. Would you do me a favor right now, please? That's the bit that people find uncomfortable, but actually your clients don't think anything of it. The favor is, would you send Fred a quick email or a text right now, preferably an email, CC me in, and just say, look, I'm just with my accountant right now, great person, really think the two of you would hit it off. Maybe you can, treat this as an introduction, maybe you can explore some possibilities together. That's all they've got to do. Now, as I say, it can feel uncomfortable asking that, but from a client's point of view, they're happy to do that favor because they know that when they get back to their workplace, they'll forget all about it. So a quick email, it's done. Then you've got to follow up. Once you've been CC'd into that email, follow up and say, hi there, Mr. or Mrs. potential client. Great to be introduced. Would you be up for meeting for a Zoom coffee or a coffee in the local Starbucks or whatever, and let's explore the possibilities. That's all you've got to do. And of course then, thank that person for the introduction. Verbally, but also maybe get them some flowers or some chocolates or a bottle of something. Not money, don't give them a discount. Just give them a nice gift that they'll remember. Okay. By the way, my final slide here is You can use this with bank managers. If bank managers know the kinds of clients that you want to work with, that's the kind of people that you'll spring to mind when they're with that type of person, and they'll refer. Obviously your existing clients, but also your suppliers as well, other people that you're dealing with. Use that with them. So hopefully this has been of value to you. Simon, I gather your address is going to be mailed to me, emailed to me, so I can get you that out, so don't worry about that. If you've got any questions, please feel free and pop them in the chat box now. Otherwise, I will leave you with this final slide with the contact details. I will make that full screen in a moment. Well, let me just have a minute just to see if there are any questions come in. And if not, then, as I say, I will let you go. I'll just put that onto full screen, and I will also make myself disappear so you can see that final slide. No questions coming in, so thank you very much. You've been a wonderful audience. Thank you very much for K3 Hub, and to David and Scott and Kayleigh as well. Wonderful, wonderful stuff that you've just covered there, so thank you.